Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, where the news is that we're ending the first quarter of 2012 with most economic issues unresolved. Even though prices at our petrol pump are at almost their all-time high, there's been a continuation of sharp falls in benchmark crude oil prices overnight, with more indications that a number of countries are about to release some of their strategic reserves. Not only have tensions with Iran eased and the Saudis talking the price down, stalled EU economies are depressing demand. And talk grows that there is evidence of surging US oil production. The mood in Europe has not really gotten any better in the first 3 months of 2012. There are fears of a general strike in Spain, and there is hoarding in the UK ahead of expected strikes by fuel tanker drivers. Eurozone bond markets overnight received their first jolt since the Greek debt exchange was clinched earlier this month, with Italian and Spanish bond yields soaring due to a combination of pressures. But over the quarter, global CDS spreads eased slightly despite the spike midway through the period. In the US, there's been a confirmation that their economy grew 3% in the fourth quarter of 2011, and the latest unemployment claims data was good, although not quite as good as economists expected. Officials there are claiming the US economy will grow this year at their long-term trend rate, which represents a significant rebound from the rates of growth over the past 4 years. In the first quarter here, our exchange rate rose almost 5% on a TWI basis. Much of that is due to our booming dairy sector, and Fonterra reported results yesterday along with growing global ambitions. I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.